So in this video we will do C-Melanie company question, and the question first commenting: assuming that the new machine is operated for the 3-year period, evaluate whether C-Melanie company should use leasing or borrowing this as source of finance. Okay, C-Melanie company is considering the acquisition of new machine with a operating life of 3 years. So okay, machine have a life of 3 years, means project life will be 3 years. Okay, and the new machine could be leased for 3 payment of 55,000 payable annually in advance. So company is just have an option either to lease or borrowing the machine. Borrowing the machine means you have taken the bank loan to purchase the machine. Okay, so first we will see the lease option, where year is 0, 1, 2, 3, and the new machine could be leased for 3 payment of 55,000 payable annually in advance. So lease payment is in advance, means for 1 you have to pay in the 0. Similarly for the 2 in 1 and for 3 in 2. So you have a lease payment. Then after that, alternatively machine could be purchased for 160,000 using a bank loan at the cost of 8% per year. So now alternative method is to borrow. Okay, where year will be same, 3, 0, 1, 2, 3, and initial investment is 160 for the machine, and bank loan cost is 8%. Don't include the interest expense, because with that interest rate we used to discount, right? If the machine is purchased, the C-Melanie company will incur maintenance cost. So maintenance cost of 8,000 per year payable at the end of each year of operation, means at the end of 1, 2, okay, 3. Machine could have a residual value of 40,000 at the end of the life. Okay, C-Melanie company production managers estimate that if maintenance routine were upgraded, the new machine could be operated for the period of 4 years, with maintenance cost increasing to 12,000 per year payable at the end of the each year of operation. If operated for the 4 years, the machine residual value would fall to 11,000. So this last paragraph is for the next question requirement. So taxation should be ignored, question has told. So net cash flow will be okay. So now let's calculate NPV, and how do we get that? Just take the initial investment plus NPV, and discount rate is 8% in our case. We got NPV for the lease option. Okay, and for borrow 8%. Okay, for borrow we also got the NPV. So now which option you will select, lease or borrow? Lease have a NPV of 153 negative, and borrow has a NPV of 148. So borrowing is cheaper than the leasing, right? So company will go for the borrow. You have to mention this thing in the comment. Next requirement is using the discount rate of 10%, calculate the EAC, equivalent annual cost of purchasing and operating the machine for both 3 years and 4 years, and recommend which replacement interval should be adopted. So now for the company is borrowing for suppose 3 years and 4 years. So in case of 3 years we have to change the discount rate, because question told discount rate now should be 10%. Okay, and next is for the 4 years. Okay, so initial investment will be same, there will be change in the maintenance cost. Now question told it should be 12,000 per year and payable at the end year of operation, and its residual value also changed, it has been fallen to 11,000. So we got it, and we have to change discount rate. Okay, so we got our NPV in the both case. Now we have to calculate EAC. And how do we get that? Just take the NPV and divide it by annuity factor for 10%, at the rate of 10% for 3 years, which is 2.487. So 60.25. And now again for the 4 years EAC we will calculate. Take NPV, divide it by annuity factor at the rate of 10% for 4 years. It will be 3.170. So 60.10. So among EAC you have to select the lowest one, and the lowest one is EAC 60.10. So you have to mention in the comment that company should replace the machine in every 4 years because EAC उसका lower है. That's why. ठीक है, ये चीज़ आपको मेंशन करनी होगी. ओके, सो ये तो हो गया for second requirement. Oh, in some question you might be told why we use EAC instead of NPV. So in that case you have to explain the reason behind using the EAC. ठीक है. Last is the critically discussed 4 reasons why NPV is regarded as superior to IRR as an investment appraisal technique. So you have to just explain the advantage of using NPV over the IRR. So I think you can do it. So in next video we will do pink company question. Okay.